May profits be upon you. Welcome to another weekly market forecast. We're looking at the NASDAQ. We just finished looking at the S&P. Make sure you go check out that video. We're going to look at the NASDAQ right now. And what do we see on the monthly time frame? We're going to jump right into this. All right, what we see is a higher high, higher low, higher high, higher low, higher high. That's what we see. All right, it's designed. It's by design. The indexes, the equity markets are designed to go up. All right, and that's what it does. Just got to be careful of the dips. That's it. All right. So we have these breaks of market structure that make it obvious when price is trading through it, not just wicking up and then back down, wicking up and then back. No, we're talking about when it breaks market structure with a body candle close, a candle body close. I said a body candle, a candle body close. All right. So we are bullish on the monthly. There's no doubt about that. And we can see along the way, we have a bullish fair value gap. Price could use these fair value gaps to come back to find support for higher prices. All right. There's another one down here. All right. But that's a good ways away. But remember, this is a monthly time frame. And if the market is, why are you not writing? Okay. Let's get out of that first. All right. Yeah. We could mark this, but it's going to be a while before it gets down here. All right. So we can go to the weekly. Come on. My internet is lagging. Oh my gosh. That's embarrassing. Come on. All right. Here we go. So on the weekly, what do we see? Let's get rid of this. All right. We see this break of market structure. All right. Price pushed down and then came back up. And we can now refine this monthly fair value gap to a weekly fair value gap. All right. Right there. Boom. What you want to note is that it has not been touched. All right. It has not been used by the market to find support for higher prices. So the potential for the market to come back down here is pretty high because this will act as a draw on liquidity. This is external range liquidity. Once we take out a high, especially an all-time high, and take it out, the market is going to look for internal range liquidity, which are fair value gaps. So we're here now. We have a break of market structure. We took out this external range liquidity. I'm looking for price to find internal range liquidity. All right, because the market goes from internal range liquidity to external range liquidity, from external range liquidity back to internal range liquidity, and so on. And that is the nature of a trend. Higher highs, higher highs, higher lows, higher highs, higher lows, higher highs. These highs are external. These lows are internal. Got it? Internal, external, internal, external, external, internal. There you go. All right, got it. Now let's move on to the daily. This is where we're going to see some differences between the S&P and the NASDAQ. All right, this is the S&P. Look at these candles. Come on, look right here. Let's go to the S&P. Look right here. Interesting, right? We got narrow range, then moving to the side. We did make all-time highs, and then we finally on Friday made a new high, made a new all-time high, but then you saw how it closed. Not the case with the NASDAQ. All right, what we want to mark is this break of market structure. All right, it's telling you, it's confirming the bullishness, right? With a close above, yes. All right, so this naturally, come on, get out of there. All right, this naturally becomes the area of demand. All right, this is a fair value area here. This little V shape, all right, down and up creates fair value. All right, this whole block here is an area of demand. So when price leaves it and comes back to it, we're looking in this bullish leg. Where would price pull back to find support and then continue higher from? All right, because it already signified, it already signaled or I indicated that it wants to go higher, but in each uh, push to the upside, you're going to see a pullback, some kind of pullback, a 50%, 30, 38, 50, 618 pullback. All right. Just think in terms of the Fibonacci retracement tool. Now, I want you to also make note of this. What is that? That's an order block. All right. And we're looking at the market. Come back to that order block and show respect with this wick. All right. Next week, I want to see if this order block holds. Let me get something there. All right. I want to see if this order block holds. All right. If the market is, if it's time for the market to push, to retrace, like this is a retracement, then I want to be aware of it. I don't want to see the market go past the 50% of this down candle. I don't want to see it go past the 50% of that down candle. So and I'm talking about the body. I'm talking about the body. Let me get it out. Let me get it out right there. All right, there you go. And I'm gonna move this to the side like so. If the market continues down here, it's already at 75%. I want to see if it's going to continue higher. I want to see it do so before it hits that 50%. After 50%, I'm starting to think, okay, this order block may fail. There was no sweep of liquidity before it was formed. Hold on. If I can just get these things under control. There was no sweep under there. So that remains a low of liquidity, liquidity low, if you will. So this may target that low, or the market may target that low. I want to see if we get a reaction from this demand, from this bullish order block. All right. Now, the the S&P is not built that way. It's not shaped in the same fashion. We have market coming back down. We have a low here for it to come back into, and the order block is down further. So this is going to be quite interesting. This would create an SMT of some kind, right? Because if it's going to test this order block down here, it's got a ways to travel. Am I right? Am I right? So that's the difference between the S&P and the NASDAQ. The NASDAQ seems to be set a little stronger. Okay. It may be set a little stronger because it doesn't have to travel as far down to find the support for potential higher prices. So I'm gonna keep my eye on it, and I don't see a good reason to take shorts into this low, towards these lows. I don't. I want to see the market reject here and come after these. What do you call these? Descending highs, which will be a draw on liquidity. So if there's a higher price to be gotten, it'll be great. But the only thing that'll bring prices up that way is if we have a weak U.S. dollar index, a weak U.S. dollar, and I'm not so sure we get that next week. I'm thinking that we may see some more lower prices. All right, if not a consolidation of some kind. Sorry, if not a consolidation. I keep pressing the right stuff, but it's not giving me the right stuff. All right, so I'm looking. We may get some of this next week. I'm not sure what we'll get, but I want to see what the reaction is when the market comes back down here on Monday and going into Tuesday. If we come down and take this low, this then becomes our an area, our potential change in the state of delivery. Do you understand? And we could expect lower prices from here, maybe down to these lows. That's what I'm saying to you. That's what we're going to watch out for. Okay. So I'm doing nothing until I see how the market forms the next daily candle. I hope you like this video. Hey, make sure you hit the like button. Yeah, make sure you hit the like button and the boost button, and check out the S&P video I just did. And I will see you in the next video, and thank you for watching.